Oh, Mike was muted. What's up, everybody? How we doing? I hope you guys are excited for another day back. I need to get this shared out because no one's probably in here. But another day of earnings. Ooh, let's start with that. The earnings hub. Let's switch it over to market cap over 10 billion. You're focused on these. Concurrent viewer 1. Hello, whoever you are. Thank you for being the first person in here. Say hi in the chat so I know who you are. Who is the first person probably coming in here off a notification? We are live on the spaces as well, so we'll be listening to that for a good little bit. But yeah, just wanted to make sure we start out with this. I'm going to get the tweeted out and everything out.
Cloudflare and stuff, like, they were holding the strongest, and I think entering this print, like, they had a good result.
Let's put this up.
And you clearly can see they're the king of DevOps in the software space, where they're just easily beating the free cash flow margins. They beat the top line, bottom line, slight guide up, which obviously that's what they're getting penalized for today, because I was one of the part of the camp where I expect to see more of a reacceleration in their guide after seeing the infrastructure players report such strong numbers past couple weeks. But again, all I care about in this specific print was they're validating my thesis that they will be one of the biggest winners in DevOps, and they're not losing their mode at all. I can make the argument they're expanding even with their big customer account. So
all right, we're talking some stocks heading into the earnings. Here's the names we got coming up after the close. Watching these ones. Stick with me, and we'll get a lot of these earnings out in red.
Our previous meeting, our call was Jumia, where that's my e-commerce spec play where I saw something in them.
52-week highs and lows.
I thought they were being priced for extinction. That shouldn't be the case. And quarter after quarter, their solvency risk diminished.
Ooh, Amazon hit new 52-week highs today.
Yesterday, they did the unthinkable associated with Jumia, where they actually were operational.
A lot of names on this 52-week high list.
Operationally were profitable, and a lot of people
Rivian earnings coming up after the close as well, by the way.
Again, priced them to extinction. That changed, completely changed, and now it's a completely different company. And the turnaround story got validated yesterday, and that was the inflection point. So again, like, I'm more of a deep dive into the thesis, more storytelling of what the company's mode is, competitive advantage, and then the fundamentals need to back that up. Valuation is a part of the equation on how to value a company, but it's a minimal part, because I'm looking for those long-term winners. And in order to get those long-term winners, I fully believe it needs to be all about the highest quality product that they actually have. Kevin, you have your hand up?
Yeah, real quick. I was going to try to jump in. Hey, not related to this. The FT is reporting that the U.S. is going to be revoking the licenses to supply chips to Huawei for Intel and Qualcomm. They are saying the Biden administration has actually already revoked the export licenses for them. So you're seeing Qualcomm drop, and you're seeing Intel pull back here a little bit, but just kind of keep your eye out. Starting to see some weakness in some of the other semi names. I'm not sure if this has been a confirmed report. It hasn't hit most of the wires, but I wanted to call that out there because I know that we probably have a lot of tech exposure here. I'll post a link to the article, by the way.
Appreciate that.
Cool. Hey, Jeff, good to see you up on stage. Want to throw some thoughts in the mix here?
Hey, can you hear me there all right?
Yes, sir.
Hey, I'm in the car. We're making some rides. So, I mean, everyone's talking about a lot of these earnings and, different things going on. I think the 10-year points are valid, but, we're in this May period.
Jonathan, Paul, good afternoon, guys. I appreciate you saying hello to me in the chat. Hope you guys are ready for a good afternoon of some live earnings. We got a lot of names coming up we're going to be covering, so definitely stick with us. Even with just above 1 billion. Look at how many companies are reporting after the close today. Just this column. Insane. So we got a lot of names to talk about here. Let me know in the chat if there's any stocks that you guys are watching the earnings for, though. For sure, and I'll make sure it's on my radar.
Next several months, we've already started to shift cautious. I think there's an opportunity for
Popular.
Calls against major market equity positions.
We're gonna be trying out the Benzinga Pro today.
There's that 10 years
Peanut, Rivian.
over our heads. It's come down. The market goes up. There's a real just inverse correlation with the.
Tell me what earnings you guys are watching. And I lowered the latency, so this should be a lot crisper. So you guys should be actually like seeing this like the second I write it.
Vibes about, oh, are you into selling May Camp? And, you know, we're repositioned here. You know,
Alright,
we're not
let's do this though.
selling
All the stocks hit
everything
52
or
week
anything,
highs.
you know, that has stopped going, that hasn't stopped going up. And I just think there's an opportunity for people to be a little patient.
When you guys are joining, say hello in the chat. We're listening to the spaces right now, the Power Hour.
Repositioning in May and just being a little patient, letting some of the news flow and some of the numbers come in, and but still bullish on the year, still bullish on tech. I just think things got a little overbought, and I think we're going to be bouncing around there. I see some support. I mean, there's a big 4,800 number on the S&P that everyone sees there. That's the old 2022
Barclays,
highs, and we're seeing some recent
Brookfield,
support levels as well. I just don't think there's a whole lot of action going on. I mean, options traders, active traders,
Cameco.
Can have some fun here as we chop.
I know you traders like to watch Cameco.
Sell some premium, that kind of thing. But other than that, it's a lot of.
How are your guys' days going, Paul and Jonathan? You guys doing well?
Out of positions, and the only other thing we're really buying right now is the utility sector, because that's a worse 6 month sector. So that's kind of where I'm at right now.
I'll show you guys what time we should be expecting a lot of these earnings too, but we're just listening to spaces. We'll start focusing in that in like 10, 15 minutes or so.
2 months ago, so we're starting to catch a little bit of a bid. Is that still on your seasonality radar? That's my one question. And then two, do you have any ag exposure on the seasonality front, as ag seem to be catching a bid too because of the the season, to say the least?
I am still in the FCG, and it is still in season. The ag season is just starting to come in for
okay,
some of the things that are going on out there, commodity, cycle, super cycle wise.
Alright, Rivian, I'll make sure Rivian is the one I'm watching the most.
The beans and the other ags, and even there's a cattle trade that starts up in the late spring here, but I don't have anything that we are actively.
Jonathan, does it sound like I'm reading your chat like sooner to when you write it? There should be it should be like a 10-second delay when it was like 20 to 30.
And we start to see how crops are doing and how herds are doing, but definitely still hanging on to the gas personally, and we had a little auto sell in the newsletter portfolio on the underlying.
HSBC,
the ETF for the commodity. It actually hit our target, so just sort of systematically got that out of the newsletter portfolio.
International
but I'm still
paper.
holding FCG myself.
Appreciate that.
All right, good question. Thank you.
Stock Talk, what do you think of what Jeff said? Good time to start selling some calls? And if we don't have Stock Talk, I'll go over to Logical. Same question.
You know me, I'm not very interested in what the SPY is doing. It's not what I buy. My portfolio is very unorthodox compared to the average investor.
I wonder if MSTR will be affected by HUD. Wait, what's that say? Sometimes I can't see. Be affected by HUD. What do you mean? What do you mean, Paul?
My portfolio was up 22% versus the SPY was up 10%. And since then, the SPY actually fell, I think, 2% or so, 2.5%, and my portfolio went up 3%. So I'm really digging what the names that I've picked are doing lately. I think that it's partly because a lot of these names didn't really see a lot of action in the last year or so, even 2 years. And so it's finally a lot of these names where I felt that these businesses are very strong are starting to finally get rewarded. Like Coupang is one, and they're reporting earnings today.
A lot of names hitting 52-week highs today.
That stock's been very strong. Pubmatic, which literally was at $11, is now at $24 just a few months ago. And they're reporting earnings today. That should be a good read-through for other names like Magnite, MGNI, which reports tomorrow. They typically report one day after each other, so it'll be an interesting day. Those are two big positions for me. Another one is ClearPoint Neuro, small cap biotech. They're kind of they're more like a med device in the biotech space.
Truest.
Couples play on biotech. And so,
Couple decent sized names here, though.
Been pretty down, but I've been, constantly accumulating between this 5 and 7 range over the past few months.
What's MSTR
I'm looking
doing?
forward to, it's a very long-term play, but I think that a few years from now we're going to look back and if they accomplish what I think they can, it'll be a much larger company. And it's great to be able to buy a company like this at the low market caps of a micro.
I mean,
so yeah, I mean,
I know it's coming down a lot, but that's still not a bad chart long term.
Trading around, I know a lot of people on here are probably better than me at
I'm almost done with this.
Other people, go to cash and do all that stuff, and that's cool. I just don't do that. I do more like focusing on individual companies and businesses, and it seems to be working this year, so I'm just going to stick to that.
All right. Saw the 52-week highs. This is a lot of companies.
That's definitely fair. Stick away from those indices at all. Stock talk. Let me know if at any point I do have you back.
Sweet, bring
But
Chemico up
we can
here.
Go over to Monative.
Coupang, why not?
Hey, good afternoon, guys. So,
GE
data out
Aerospace.
yesterday or this morning. I think it's just.
Let's turn Monative up a little bit. Monative's good. I like to listen to
doing
him.
what it's supposed to do. The guidance is still solid. The growth in user base is solid. It's just a little bit of profit taking and a little bit of adjustment for outsized valuation. So that's all I see. I'm not suggesting anybody rush out and buy here. I'm just saying it's not part of some massive reversal pattern that's going on. That's how I see it. That strength in guidance and earnings is being sold into because these guys have all run in expectation of these results, and unless it's something exemplary, you're going to see
Yeah, these are just names with decent volume that hit in 52-week highs.
There is a lot of profits to take, even for swing traders that got in a few weeks ago. I like Logical. I have a very large position in Coupang, but that was from a while ago, so it's already long term for me. I'm just letting
There's
it
any
run.
big ones I missed?
And if it bumps up a lot after hours, I will trim it. If not, or if it goes down a lot, I will add more. Again, it's I think the stock is mistakenly devalued from their
missed.
From their Farfetch acquisition. Couldn't call it an acquisition. It was literally a bankruptcy buyout for them. They got it at $500 million, so it was nothing. There is a lot to gain there, and it was unfairly sold off on that news. And it's slowly recovered. That last quarter, the quarter before that were much better than the previous 3-4 quarters. So this is on the right track. It's back on growth, and it should do well long term. It's not going to, grow like some of these other companies, but it's going to be steady.
I mean, what do you want? I don't know. Why own MSTR and not Bitcoin?
And let them, execute in new markets what they've done.
Yeah, the 52-week high list. Amazon being on here is intriguing. Maybe lower this one or two. Qualcomm, Goldman, Procter & Gamble, GE, Pinterest, Royal Caribbean, Schwab. Some decent-sized names on here.
Such a blah event. I mean,
a lot of other small ones. Oh, fuck, I left Morgan Stanley down here. Shouldn't have done that.
Now there's really nothing else short-term.
Morgan Stanley's a decent name. Should have been up.
Going to inflect the stock. I still think that their best bet now is to announce a deal with either OpenAI or Google, as was rumored, and get a few billion a year locked down with a nice kicker every year for growth, 15, 20, 30%, whatever they can agree on.
I think maybe have 4 people in here right now. Nice.
For now, rather than build up.
You guys are listening to this. Give the stream a like. Hit that like button. Let's see if that helps with the algo.
Keeping up with the Joneses is just not worth it at this point in time, in my opinion. They have to do that, but
and how'd you guys find the stream? Is it through a link on either Threads or YouTube or Instagram or like directly like through notifications or features? I am curious on that. I want to know what I should be pushing.
That's that. Let's see what else. Kevin, there was a news that the Department of Energy is buying 3 million barrels, or as requested quotes for 3 million barrels to refill SPR. So that was one this morning.
Negative $1.16.
And on the news that Kevin just
Negative
gave
$1.25 last quarter.
if it comes to be that there is a
double
restriction on exporting
up to 3 likes. Thank you.
To China, I could have wider implications. Certainly between the two, Qualcomm or Intel.
Alright, we got about 30 minutes until the market closed.
They have a lot of other businesses, so they could see some.
Let's see what time we should be doing all this stuff.
Tit for tat action from Chinese government. So it could affect and in terms of valuation too. Qualcomm has run up a lot, so it could have more give back. That's just my thought. But other than that,
hey, thanks, Jonathan.
For earnings to start rolling.
Have you watched any of the other videos I've done outside of just the live streams?
Sounds good.
I've been trying to put some more effort into that stuff. If you have any ideas or you want to see, I'm thinking I'm gonna do a Congress trading video. Talk with someone there who can give me some insights into some recent trades from Congress, and I'm thinking I'm also gonna do like a deep dive into Cathie Wood and ARK Invest and all their holdings. So, and 2 things I have top of mind right now. We'll see what we go past that though. That Warren Buffett video, I'm pretty happy with it.
And I'm not one of those guys who wants to ever say like, every trade works out well.
Arista though, 405. Occidental 415. I'm writing all this down. Coupang. 4 p.m. Rivian. This is a big one. 4 p.m. Let me make sure I have the big ones on here. So Arista, Rivian, UpStart, right? Wynn, LYFT. This will be a little bit overwhelming, but we'll pull it back. We need a Reddit should be an interesting one. OXY.
In February, and then went to a full position pretty recently. That was 3 weeks ago. I brought that up on here too. I think Jag actually also talked about the fact that he had
how to really read an earnings sheet. Let's earnings
was better than mine, but now we're kind of seeing a turnaround here.
Video.
Speaking, there's not so natural gas.
How to read a report.
There's so many things that can happen.
That's a good idea. I have some people I can get on for that too. I like that idea, Paul. Right. What match group? I know some people care about that one. I have Coupang. No. By the way, this has been Zynga Pro. We're gonna test how this one does on the spaces this week. And go from there. Virgin Galactic, Dutch Bros. I could search for the other ones if I need to.
We continue to see producer buying in that sector as well. So we got this false.
What am I using for fundamentals? Here, this is the one I like a lot. Let me pull it up. I like Y charts. I'm a fan of Y charts. So we could go into stuff like this, Rivian. And then you can look up a bunch of stuff. 10 years, key stats. You can see all I have. But like, let's look at the quarterly revenue. And it tells you the numbers, and it gives you a little chart. You can view field chart. And then from here, I can add in like net income, quarterly. See how they both compare. Y charts is cool. It's a little expensive, but Y charts is cool. Compare companies. Not even in the same realm.
Look at natural gas and they're like,
you can market cap, so you can look at like where's Microsoft.
Natural gas kind of does whatever.
All the race we got going on there.
Don't get too wet to natural gas doing what people.
Yeah, Y charts is cool.
Just kind of does whatever it does. And for me, I found the best way to trade it is just systematically, and that's what I've done for many years. But it's a hard thing to trade, and also on natural gas. People keep asking about this. All
right, I got that earnings video thing done though. I like that. Thanks, Paul. Thanks, Paul.
When you trade natural gas, you got to trade that at a very small size. The volatility of that product is really high. It's very similar.
I'm gonna start shifting that spaces into earnings, so we'll be listening more in that direction a little bit. But let's get some more pre stuff going.
some people, that's hard to do, considering, you know,
UpStart, I know some of you crazies will care about. 405 should give you some volatility.
And all these things. I just really advise people, if you are trading natural gas,
LYFT,
small. If you don't
405.
don't trade it. But looking over the whole market at the moment and seeing where money's kind of flowing, and we've been talking about China for a while. We got that signal to
I guess I do have UpStart on here.
now. It's continued.
Just taking some notes, getting ready.
And I think what we continue to see is kind of money flowing into
and I'll
China
use this up here.
and emerging markets. And once again, you know, there's so many arguments both ways about it.
Go check around.
Bad trade. Hey, this could happen. This could happen. To me, I don't see the Chinese market going anywhere anytime soon as an ETF or an index in futures, however you trade it.
I'm hearing some weird noises around me, I can't lie. But I don't think you guys can hear it.
But China, just FXI is how we're trading it. We're still long China. We're still seeing relative strength into that area. It's down a bit today, but lately it's been ripping for the last couple months at the moment. So, and then if we look at Brazil starting to pick up, we just started a new position in Brazil. That can also be a part of the ag trade. And you know, like Kevin's been talking about as well, and
one thing I do like about trading views is you can look up stuff
show,
like
we do a show,
sure stuff around Brazil.
Mondays, around noon most weeks. And what we go over there is the commodity market. Something we've been pounding the table on over and over again has been corn, soybeans, wheat. You know, you basically have these extreme low prices in these products. And also if you go back through history and you go all the way back, I mean, there's wheat prices all the way back to Egypt.
Let's do this.
So you can go way far back in history and look at wheat prices if you really want to, if you're a psychopath like me.
Market's closed for that.
But if you look at that, you also see that wheat has kind of a very interesting war premium.
Are there any other earnings that you guys are interested in that I'm missing from here, from this top row?
Wheat's been moving really nicely lately. That's another one that's been a big move, moving nicely as people continue to kind of look. You see a lot of the stocks are struggling, and there's been. I'm also not bearish on the stock market either, but I'm just saying a lot of people are looking at the stock market and going, hey, there's a lot of volatility here in this. If you look at soybeans, wheat, soybean meal, oats is another one. We're long oats, soybeans, corn, soybean meals, and a long signal. If you look at all of those things across the board, you see that there's a lot of these new trends just starting right now. And so definitely look at those markets. There are ETFs for these as well. Corn is CORN. Soybeans are soy B, SOYB. There's a lot of them out there. And once again, it's, you know, I'm not saying everybody trades futures or the commodity markets. I'm not saying the ETFs are a perfect vehicle to do this.
Zoom info could be one that people watch, maybe.
I'm just saying
I can add that later, though. Confluent. I think Shy's going to talk about that one.
Think outside the box sometimes and looking at different areas. That doesn't mean commodities, you know, like, Logical also mentioned, he was talking about small caps, whatever. There's a lot of
403. Interesting.
Good. But if we look at the market, if you look at the S&P 500, you look at the NASDAQ, even the DAX, and also the European Eurostoxx 50 is also almost there too. If you look across the board, you're starting to see a pattern that I talked about a couple weeks ago, which is a higher low and then breaking above those recent highs. Not the high, the all-time high, the recent high that we hit in April, the end of April. So we got above that zone. We actually
got five more minutes until I focus it in on the earnings talk. 5 more minutes.
Like that, after a higher low, that's usually the start of a new trend.
4 more minutes.
Now, once again, there's a lot of fundamental reasons to be a little bit worried about the market at the moment. I'm not, but once again, I'm mainly a price action trader. You know, there's people who are gonna get it right in a different way or have different time frames. Me as a long-term price action-based trader using systems to trade, I'm not worried about the market just yet. I have certain reasons, and also I don't trade the S&P 500. I'm still in the inflationary sectors. These are things like energy. I'm also in China. I'm also in the industrials. I'm also looking at different areas in commodities and so on, and gold and silver. So, you know, there's a lot of things out there, a lot of things moving nicely. I'm not that worried about the market as a whole. And Bitcoin, we posted a trade recently. We were on the chart report for the chart of the day for that one. and it was Bitcoin basically making a false breakdown signal, giving a buy signal. I said basically to buy it when it gets back above 60,000, short-term swing trade to the old highs. So right now we're still in that trade. It closed above 60,000. It's at 63,000 now. Looking for it to hit around 70,000, and that's where you can cash out on that trade. All right, looking forward to what everybody else has to say. Thanks for having me on, guys.
Beautiful. Yeah, I always appreciate you keeping us in the loop on everything that is happening over in the commodity world. Certainly, especially with some of this global conflict, there's interest, I think, in oil and other areas more than ever as well. So we've run through the panel a little bit here. I wanted to double back to you, Jason Hall, for a second here, since we don't have you on too often. And first off, just hear from you on some of the other things that got mentioned. We did have some thoughts shared around, some of these almost utilities, oil, some of these other areas. And then we've really just kind of come through the rest of
Welcome, anyone joining.
We're not quite done. There's a few more. I think you mentioned Starbucks and a couple others before, but wondering, on the first part I asked, it's kind of a double part question, but then in addition to that, what are you looking forward to over the next couple of weeks?
Yeah, before we do that, I want to follow up on what the prior speaker, I'm sorry, I can't remember your name. It's already fallen out of my head. But you're talking about natural gas. I think I want to talk about
the good news is his name's Jason.
Oh, what? Oh, and of course that's why I can't remember. it's Jesus, how about that? So apologize, Jason.
No worries. Some of us don't have our names on there as my company name. No worries.
That's cool. So it's really interesting. You were talking about with natural gas, right? How incredibly volatile it can be. I think it broke 12. It break 12 in January and spent a lot of time around 4. And
it is rough to sometimes listen to the oil conversations are tough.
There's a lot of spot prices out there too. There's spot prices. I saw a headline earlier today. There's spot prices. I think Waha that is negative. It's like negative $2 a thousand therms right now.
There's so much going on.
It's remarkable how much it can move. And understanding like the basic mechanics of these
Rivian Reddit casually expected to lose $3.43 per share. EPS,
for the actual consumers and the buyers of it, not the traders, people that are actually using it on the other end. That is in the logistics cost of moving it around. It's much, much higher on a per unit of energy basis than oil or refined products. And people don't know that, and they walk into these commodities trades and they get absolutely murdered and have no idea why. So definitely take Jason's advice on that. I've seen it happen way too many times. All right, so let me talk a little bit about earnings, what I've seen and kind of what I'm looking forward, right? Yeah. So banks reported early. That's kind of the big kickoff to earnings season is when the big banks report. That's like the unofficial beginning of the real madness, right? And now we're getting more into tech, and we've still got a few sectors that are going to report.
Let's see what you're looking at.
One that I'm really looking at reports in about 25 minutes. We're going to see the report from Confluent.
Coupang should be out at right at the bell.
Shy about some of these.
Have that on here, correct? Yeah.
Great tech businesses, like the leaders, the ones that
we'll
are
keep
just
this expectation up.
The best, right? They're the one that is probably going to take most
They're
of the market.
saying 6 cents, 6.9.
Customers love it. They either love
7,
it or they have to use it.
6, 7.
And they keep spending more every single year. And I think Confluent has the potential to
be
one of those.
All right, good to know, Ollie.
Quarter,
what's up, Ollie, though, by the way?
Really
appreciate you being here.
I don't think enough investors really appreciated as they generated some positive cash flow.
More.
There's still gap losses, but look back at
sports. We take the money.
So many other companies over the past 4 or 5 years that have made that transition where, first of all, they start off with these really high margins, right? And a really high growth rate.
I can't say I know what an Arista
Networks
even does.
They're basically software businesses. They're not running factories where they have all these really high fixed costs.
Yeah, Ollie, I did. I signed off for a little.
Where you've got 75%, 80% gross margins, and your operating costs
American Computer Networking. So this company reports
revenue that you get, you keep more of that gross margin, and you end up with these really, really big profit numbers. Like I mentioned with Datadog, I think they had 31% free cash flow margin last quarter. So talking about Confluent's going to report today.
Numbers.
Last quarter, end of last year, they reported free cash flow. They're saying they're going to be free cash flow break even this year. That would be a big statement for this business to make. So what they do, the short version of what they do is we're seeing kind of this transition in the way companies use data. Like the legacy way companies use data is batch reporting, right? You've got a database that's being fed from some application. Maybe it's your order management, maybe it's inventory, maybe it's your CRM. one of 100 other things that businesses use. They get all siloed. They end up with all this data in all these places and all these applications. And then once a month, they run a report, right? And a month has gone by, and now they're trying to react to the data and like trying to use it. Maybe they got pissed off customers they didn't know pissed off, and they're trying to fix things after the fact. So with data streaming, with the ability as data is coming in real time, and Confluent's kind of the leader here, the founders of the company, including their CEO, Jay Krebs, they created Apache Kafka, which is the software that it's free, it's open source. It's this platform for data streaming, and like everybody uses it, especially big companies. They're using it. What they're finding out is they can't do it on their own. It doesn't make sense for them to build something. So Confluent,
I did see that, Ali. It was actually pretty cool, right?
Created Kafka, and they're like, you know what? This is a much better business than working for Microsoft and LinkedIn. Let's go start this business up. And they built Confluent. So on top of this open source product, they have these off the shelf versions of Apache Kafka.
I'm jealous. I wish I got to meet him. Got to do an interview. That's pretty cool.
Think about CrowdStrike, all these companies that are focused on the cloud. So now it's taking that data from your cloud applications, as it's coming in real time, and leveraging that data so you're not reacting. You're actually acting on the business, on the data that's coming in, and using it to inform how you can improve your business, right? Make it part of your business plan. And if you're
welcome anyone coming into the live stream. I know I just tweeted it out, so we should be getting a little bit more people in here. We'll see.
Or you're giving your customers weeks of head start on your competitors, weeks of head start on leveraging their data. So that's one that I'm really paying a lot of attention to. Want to see what their results look like. Want to see what their guide looks like.
These are a lot of names we got coming.
A couple things I just want to add real quick about what you just said about Confluent. 2 sentences. I love Confluent. Data streaming, I think, is an absolute future, and they're the leaders of this specific niche of data.
Confluent.
However, using Datadog as a comp, I do think there's some near-term risks in Confluent's valuation, unless they can actually produce 25% plus growth this year, and just like a couple percentages on the free cash flow. If they just meet and don't guide up, this will go to $20, and that's when I want to add specifically. I used to own it, sold it off in the 30s. Valuation just didn't make sense unless they prove to me that they can grow in the mid 20%.
Tell me, what earnings are you guys watching the most?
I absolutely think they can. I just thought there's some new.
What earnings are you guys watching the most to make sure I have my eye on?
If they just didn't do the guide.
These are the names I have on my radar right now that I'm going to be covering. So if there's one not on there, just let me know.
That's a good point, because the growth has definitely slowed here, and we've seen it broadly.
I want to make sure I'm getting what you guys are watching.
Sector, right, where growth rates have slowed.
I'm excited to see Reddit.
Like the 3rd year in a row, growth rates have
Reddit should be a fun one to watch. Although it says 7 p.m. I guess we just don't know when they're going to be reporting. What does this say?
Issues with a couple of really big customers that moved away from the cloud back to like on-premises. They're staying with Confluent.
It's super rare. That never happens, everyone. That's like a one-off.
Exactly. The market freaked out, right? Completely freaked out about it. And for good reason, because like
7th. This is 4 p.m. So we'll see.
Concentration a problem, right? So, but again, the key point here is like with all of these, Shai's like watching.
All right, Ali, I'm rooting for you. Let's go, Datadog.
Looking at the growth rates, and then looking at like the
it actually might be different. I'm seeing this place Reddit on here. It's saying 4 p.m. So we might be okay.
Low 80s margins for like the Datadogs and the CrowdStrikes out there that are more on the security side. So it's seeing, can they get to like the scale where those margins are going to turn into real cash flows, and that's where investors can win from it.
All right, we got about
though, I think,
10 minutes till the market closes. We get some of these earnings coming out. I'm looking forward to it. Here we go. It's the prime time.
The market thinks the economy is look at bank stocks. Not just most of the stalwarts, their stocks are doing fine, like your big banks. But you'll start looking at like the mid-sized banks.
All right, someone put something in the chat and tell me how long it takes you. It takes me for you to read it, or from when I read it for you to hear it. Shall I say? That didn't come out as English.
Right, they're down
20-30%
year to date, because the market's worried about the economy, especially like the borrowers on unsecured debt, right, where there's not a house or a car or something, where people are going to prioritize making that payment. It's
taking longer than I was expecting.
And they're seeing weakness and concern there.
The Knicks suck. Wow, Ollie, damn.
Some of those businesses,
how long did it take? You made me read it out. You got me to read it out. Rough, but
that could be just a really good opportunity.
Big win last night.
Because the best time to buy banks is when the stocks are down.
It felt like a 10-15 second delay.
As long as you're buying a bank that's good enough that they're not going to screw it up because
this was cool though.
Their debt, manage the risk. because when the market does return and the economy's in good shape after the fact, those stocks are always up a ton. They're always up a ton. Once valuations return back to normal and all the fear washes out of the market and greed takes back over. So I'm really, really looking closely at a lot of banks, making sure that I own really high quality ones. So like Shaw's talking about the same thing with these technology companies. Whatever it is, you buy quality. If you buy quality and own really, really good businesses, be mindful about valuation, and then you hold through the madness of the markets, guess what happens? You make money. You make money on the other end.
Two DMs.
And a lot of that's having to manage yourself, right? And making sure you can actually get through that. It's great to say it, right? But holding through 10 or 15 years of crazy markets is one thing to say, it's another thing to do it.
All right, I want to jump into the conversation and shift us towards the earnings that we got coming out in about 10, 15 minutes or so. It's a pretty busy after hours of earnings. We got a lot of names coming.
Busy day.
Yeah.
Busy day.
A lot of like small mid-cap names. We don't have that like massive Apple or whatever reporting earnings, but a lot of names. Just quickly reading through a lot of the ones that I'm seeing, and then we could dig into a couple of them. We have Rivian, Arista Networks, UpStart, Wynn, LYFT, Twilio, Occidental, Reddit. I'm excited to see what happens with that Reddit earnings. I think this is their first time reporting earnings, but TOST, Coupang, Confluent, Astera Labs, EA, Dutch Bros, Match Group, Virgin Galactic, Zoom Info, Mckesson, etc. There's probably 10, 15, 20 names that people care about and have some close followers. Clover Health, Stock Talk, your favorite. What are you watching? Are any of these earnings catching your eye besides Clover Health and After Hours? I know you've been a bull on that one from the start.
Okay, well, Evan loves to make those jokes, but no, I'm not watching Clover Health.
Interesting.
There are a couple after hours today that I think are interesting. I will be watching LYFT, Twilio, Confluent, Coupang, TOST, Wynn, UpStart, Rivian. So there's quite a few that I think are interesting. I don't have positions in all those, but I will be watching.
What are you watching for moves on those ones, or how they might impact some of the sectors that you watch?
They're just higher beta names.
Yeah.
I mean, I tend to pay attention to the higher beta stocks. I'm a short-term trader, so those are the types of names that are going to move other peers in their categories.
Adding Zoom
they're
Info.
They're going to move probably a lot themselves as well. I think the implied moves
Zoom
on
Info.
most of those are either double digits or close to double digits. So, yeah, I mean, it's a kind of a different bunch of companies that we're seeing report this week than we saw last week. Last week we're kind of focused on a lot of the blue chip names. This week you have a lot of these, some of them are household names, but others are kind of retail favorites. You have your Affirms, your Shopifys, your Ubers, Lyft, UpStart. And so these names just tend to be high beta traders. And they tend to generate a lot of sympathy reaction too. So, there's going to be a number of reports today that may or may not present an opportunity. As you know, with earnings,
all right, we got a couple earnings coming out. Here we go.
Into an earnings with positional bias. I usually wait till the report happens and then develop some bias after that and look for some read through to some other companies. So that's what I'll be doing today too.
Kevin, while we still have you here, I know you're going to have to go in a minute or two. Any of these earnings interesting for you? Anything you're watching?
I think Twilio is going to be probably the most interesting one. That thing can move, and it's been moving to the downside post-earnings. It's a very tough business. They actually had kind of a niche product going into COVID, right, to be able to build out API structures and easy to implement API structures for small businesses and mid-sized businesses. But obviously, technology has improved rapidly, and they just haven't been able to keep up. A lot of competition within the space, new technology that really they don't really need, can't really compete with. And so they've been in this just consolidation type period when it comes to their business. And I'm looking to see if they are seeing a bottom or if we do see a pretty rapid reaction to the downside. So that's the one I have my eye out on. And then Rivian is just going to be interesting, right? That's just going to be you keep your expectations fairly low, and every time they report something new. So that's what I'm kind of looking at there. And yeah, that's about it. We actually just had a pretty big candle on the downside on the SPX, by the way. But yeah, those are the two. I appreciate it. I'll be back on the other side of this. Appreciate it.
Appreciate you as always. But I guess it turns out starting a new car company from scratch is pretty difficult. What was it? Isn't Tesla like the only one in the U.S. or in like the last 100 years or something? That's I guess there's a couple other ones that haven't gone bankrupt, but should be an interesting watch, and I don't think people realize how difficult it is. And Rivian actually has a good product and has some good stuff behind it. A lot of interesting. There's also some talks around a little Rivian Apple partnership. We have no idea what that looks like. It could be, hey, maybe they're just adding Apple CarPlay to the car, or maybe there's some more stuff. I think the Rivian fans are salivating over something potential. Stock Talk, you see that one with Rivian? You think Apple's going to take over the entire car?
The other company you were thinking of was Ford, by the way.
Ford, yeah. Okay, fair enough. It's a good one, too. Fair enough. I like it.
No, I was just saying, you were mentioning the two that have never gone bankrupt. The other one's Ford.
Nice. But yeah, you have any thoughts on that kind of Rivian Apple partnership? We were talking with some people. This isn't, there's just fun speculation, we'll call it. I mean, Apple, I feel like, could do some good software and make a good interior of a car in a premium setting, rather than having to do everything.
I don't even know if that's what their intention is. I mean, after they abandoned the self-driving car that they were supposedly building for many years, I don't know what their intention is now in the space. If they want to just be like loosely associated with a vehicle product, if they want it to be a directly Apple branded vehicle product, I just don't know. But also when it comes to Apple making these types of partnerships, I mean, we've seen this kind of news before. Do you guys remember the Peloton rumors that were like being thrown around for like 3 months? And you had a bunch of these publications that were speculating on that as well. And that never culminated into anything. Maybe Apple was considering it. Maybe it was just, something that was being casually considered. There's no way for me to know that.
Rivian's a big one.
These rumors do kind of get thrown around a lot.
Yeah,
I'm not really sure what sort of partnership would make sense. I mean, if Apple wants Rivian to build a car for them, I'm not sure what like the economics of that deal would look like. So, it's hard to speculate at this point. I'd love to get some more detail, but I mean, all we found out yesterday was just that preliminary article, and I don't think they specified anything in that article, actually.
You guys are in here for the first time. Make sure
it's
you're
hard
subscribed.
to speculate at this point.
Hey, real quick, shout out to Evan. So, Evan, you brought up Peloton a week ago or 2 weeks ago?
Yeah.
And kind of threw out these speculations of they could be a takeout target. Yeah, this, that, and the other. We're going to be talking about this name a lot in the coming weeks. And lo and behold, we're seeing news every day. And today, regarding the potential for private equity takeout target, it sounds like there's going to have to be a lot that they're going to have to do to make that deal go through, as we talked about. But I wanted to shout you out, man, because that was completely out of left field, and you hit the mark on that one. So good work there.
Even if it's lucky, I'll still take a good pat on the back. Now, I should have bought some if I was actually thinking about it, but oh well. If I would have done it, if I would have bought it, then nothing would have happened. So, no, I'll take that shot. We got about 2 minutes till the market close here. Should be a pretty interesting one. One of those after-hours earnings where there's just so many numbers being pelted at you. A little stressful, honestly, on this end. I don't know how about you guys feel, but feeling a little stressful. Shai, I know a couple names here that are intriguing for you. I know you talk about Confluent a little bit, but I've heard some Coupang talk and a couple others. What are you looking forward to in these earnings?
I mean, e-commerce has been strong this earnings cycle, so I expect Coupang to kind of mimic what we saw from Mercado Libre, even Jumia, which is a tiny one, but even Amazon shows some strength. So I expect to have strong numbers. Twilio, again, catching a falling knife. It is cheap, but they're not executing on the operational fronts past couple of years, and that's a takeover candidate in my opinion. Confluent, I really want. It's just one in the teens. UpStart is just a vehicle to capture some kind of alpha on interest rates. It's not. Their moat got sunsetted. Let's just say that in the past couple of years. Reddit and ALAB, their first quarterly earnings report since their IPO. I love ALAB. And Astera Lab, sorry, keep it our
Coupang earnings are out, by the way. Sorry to interrupt. I threw it to you and I feel disrespectful, but 7.1 billion beating expectations of 7 billion on the revenue. EPS was $0.00, it says. I'm looking at 7. Oh, adjusted was 5 cents, which is a miss on expectations of 6 cents. Wolf, I need you on the stock price movements. What's Coupang doing?
Down about 1.5%.
All right, let's keep looking for more of these numbers we got coming out. That's the only one I'm seeing so far. Sorry to interrupt. Down 7.5 is interesting.
No.
1.5%.
Percent and a half. Ah, okay.
Down 3% now.
Percent and a half makes some sense.
To check
4 now.
To check the reactions.
Brokers.
Apple stock up is very okay.
Yeah, TrendSpider is my go-to.
For what? For price moves? Yeah, no, that. I am, use a couple things. But I do, right now I'm just using, Benzinga Pro's not bad for getting this stuff, but it makes some mistakes.
Almost down 5%.
Waited for a couple more of these earnings. UpStart trading halted, but they like to do that.
Big Commerce is looking for a sale right now, BIGC, so that might catch a bid.
I think I saw a headline around that a little bit ago. I don't know if that's when that came out originally or it was like halted or something. UpStart normally does halt for earnings, by the way, so that's a thing that it does. But yeah, Coupang came in.
Now it's down 7.5.
Yeah,
earlier you thought I said. Now it's actually down 7.5.
It was the nail in the coffin. We should have known it was going there. Wynn Resorts is out. Let's see. It's coming out at a weird time, so I can maybe even look at it. Operating revenue was 1.86 billion. Looks like that was a beat on expectations of 1.8 billion. $1.30. Missing expectations of $1.39 is what I'm seeing there. So mixed on Wynn. What's the stock doing for Wynn?
Let's look.
Yeah, Coupang, that's a big candle down. Wynn.
Yeah,
candle down.
Wow, now it's truly dropping, down 9%. Wynn's up about 1%.
All right, waiting for some more. Normally, by the way, for anyone who's new onto these earning spaces, they come out generally around 4, 4:05, 4:10, 4:15, 4:20, every single 5 minutes or so. I'm seeing UpStart now is out. Let me get the expectations in front of me. Total revenue is 128 million. I thought it made a little bit more. 124 is what's expected, so that's a beat. EPS, adjusted net income was a loss of negative 31 cents per share. It looks like a beat on expectations of negative 39 cents per share. So beat on both top and bottom line for UpStart here. And let's see what UpStart is doing. I need to get all the forward guidance stuff in front of me. Actually, let me do this too. If anyone has any thoughts or anything to get into the conversation, feel free to just jump in. But UpStart with a little bit of a move down.
UpStart's halted, isn't it?
Oh yeah, they do halt for earnings, but
I don't see a move down though.
that's fair. No, it does halt for earnings. That was the last candle I was seeing.
Yeah, Coupang's still down 9%.
Should be getting a couple reports out in a minute here.
Wynn's up about 2%.
2%. Nice. These in-between times, in between these 5 minutes are always interesting.
Do we have LYFT yet?
No, LYFT should be out at 4:05. LYFT should be out in a minute. This is the minute one. It will be a little bit harder for me to go in. What do we think we care about the most? Arista, LYFT, Twilio. I want to see Reddit, TOST. I'll just need to pick one and focus on it. Let's get ANET up. ANET's a pretty big company, I'm fairly certain. At least market cap wise. If I'm thinking. Alright, 4:05.
TOST is up 5.5%.
I don't see the numbers yet. Oh, wait. TOST. Seen Arista Networks out. Revenue 1.57 billion, beating expectations of 1.55 billion.
Wynn up 3% now. Toast up 8.5%.
For Arista, it was $1.43 on EPS. That looks like a large miss. Maybe I'm looking at the wrong thing.
Coming in on 52-week highs on Toast. It's now up.
That was the wrong thing. Arista EPS was $1.99, beating expectations of $1.74.
44% up this year for Toast.
Wolf?
Coupang bouncing a little. Still down 7-8%. Just looking through some of the names. Toast up 8.5%. I don't think that UpStart has unhalted yet.
Yeah, EA earnings out, ZoomInfo earnings out, LYFT earnings out. Okay. Oh, I'll keep going through. LYFT.
EA's flat.
Let's see if I have anything through this way. No. Okay.
LYFT is up 9.2%.
LYFT revenue of 1.3 billion. Wall Street was expecting 1.2 billion, so that's a beat. I'd have to dig in to find the EPS, so I'll just wait a minute on that one, honestly.
Looks like PubM had a decent report, accelerated top-line revenue growth, but I'm not seeing any reaction yet.
Problematic. And that was one you were watching closely, right?
Yeah, I guess it's maybe down 2% right now. I can't tell, though, because the spread looks pretty big.
ZoomInfo.
By the way, SPY did get a bit of a pump in volume in the last hour, so we're not the new lowest day of the year.
ZoomInfo revenue is 310, beating expectations of 309. And I'll have to dig in for EPS as well, which I don't necessarily want to do at the second. I'll do that a little later. Toast was one you were saying was moving. Let me get the expectations in front of me. Toast. Yeah, go for it.
No, you're good. It's still holding decently. It's up 8.5.
LYFT EPS is negative 8 cents. Missing expectations of negative 3 cents is what I'm seeing. A lot of numbers in here. I'm not just seeing revenue for Toast, so I don't know what they're doing.
Yeah, PubM report looks really good, actually.
Any thing specific? How they come on top and bottom line? PubM, right?
PubM, PUBM. It looks like they have accelerated revenue growth to 20%. They tripled their free cash flow from last year over Q1 and doubled their EBITDA margin versus last year. So clearly, I mean, the ad industry is on fire in this first quarter, as I thought, but I don't know if that'll be reflected since the stock has run quite a bit.
I think Mckesson EPS was $6.18, missing expectations, and then revenue was also a miss on expectations. MCK might be moving lower here. Not a name I would think would be getting a huge move, but that was some weak numbers. That's a big bar down for Mckesson. How much is Mckesson down? MCK?
MCK. Sorry, I'm looking at UpStart to see if they're going to change it, but MCK is up 0.22%.
Interesting. In after hours, I saw a big candle down. Fair enough. Okay.
No, I don't see any big candle down on Mckesson. Looks like they've been going up all day.
All right. Twilio EPS was 80 cents, beating expectations of 60 cents. Revenue of 1.05 billion, slight beat on expectations as well. What was down here? Q2 consensus of $1.82. All right. What else? Revolve Group. EPS was a small beat. Revenue was a small miss. Corsair Gaming missed on EPS and revenue. Wolf, what's Corsair doing? This looks like a quarter that would be moving lower.
But Mckesson not doing anything in after hours.
MCK. No, CRSR.
Corsair is flat. It hasn't moved at all in after hours. Oh, and now
squeezing up. Do you guys have Reddit's numbers?
3% up on Coursera.
Reddit is out. Get this in front of me. Revenue of 243 million, beating expectations of 218 million.
Yeah, Reddit pumping.
I don't
Reddit
quite see
up.
EPS.
Reddit up 18.5% in after hours.
18.5, geez. But yeah, their revenue is a decent bit above expectations. Yeah, that's a pump. Give it a second.
This can't be right. I'm looking at the EPS for Reddit. Expectations $2.34, and they reported negative $2.34. Reported negative $8.19. That can't be right.
I'm seeing the expectation was negative 343 for adjusted. 214 million. Yeah, so that might have been the gap number that was given. Gap EPS of negative $8.19 is what you're saying you saw?
Reddit's still going. Reddit up 20%.
That's what this thing is saying.
LYFT gave back about half of it.
I'm looking at the Coupang deck. There is no red flag here. I see this is going to recover most of it, if not all, by tomorrow, the way I see it. I don't see a problem here at all.
Monative, it's definitely just because the stock is up so much and into that kind of, it's been like consolidating at this level, trying to break it open. So,
but again, right? My point is, I think it was unfairly sold off on Farfetch, and I think it's not been given the benefit of its revenue growth and tight cost controls that it's been implementing for the last few quarters, and it's not been given credit for that, all because of the Farfetch acquisition. Now they're losing money in Farfetch, right? But it's going to take some time. I think it was really too cheap a deal for them to ignore completely. So I will give them some credit for that. But you're right. It's run up a lot into this number, so it could give up some. But I'm more than happy to pick it up. If it goes to 20, I'm gonna buy a big chunk.
Yeah, I mean, I'm in agreement with you. I've been long this stock since January 2023. But yeah, I mean, when the stock sold off on Farfetch, it was probably at like 15, went down to 13, and from there it's up, whatever, it's up like 80%. So it is what it is.
It is what it is. Match Group out as well. EPS 44 cents, beating expectations of 41. Revenue 859, beating expectations of 855. I want to find more into this Reddit thing, though. Yeah, keep going. What's up?
It looks like Pubmatic is not green in after hours. Not much, but it's cool.
Hey, better than down big. Daily active users for Reddit, 82.7 million. Weekly active, 306 million. Decent size. Any of you guys use Reddit a lot?
Occasionally, when I need the answer to something.
Only to search my anxieties and how other people are dealing with them.
Yeah, I use it like specifically like for reviews and stuff. So I guess I do that a little bit. Haha, do. But that's about it. I don't like actively use it. I don't know if I read out
the number they have there, Evan, that you thought was daily active users is actually daily active uniques, which is users that engage with the app over 10 times in one day.
Oh, interesting.
Yeah, so I know it looks like it says daily active users, but it's daily active uniques.
Why would you do that? Why would you not just use the better number?
Well, I don't know. I think it's still impressive. I mean, they grew daily active uniques by 37% year over year. That's pretty huge. To 82.7 million. I mean, the peripheral numbers on Reddit are what are impressive here.
By the way, if you're enjoying this live stream on YouTube, make sure you're subscribed to the channel and give the live stream a like. Appreciate that. I'm trying to do more of these live earnings, break these numbers the second they come out. So make sure you're subscribed if you want to see more of this stuff. Hit that notification bell as well.
You're talking about net on the day? Yeah, -3.
What stock?
Oh, no. Yeah. Well, Coupang just recovered quite a bit.
Nice. What were you saying? Sorry, I interrupted. Sounded like.
No.
Nope.
I was just saying the peripheral stuff was good, unless you're talking about logical.
I might have interrupted someone. I don't know. Whatever. Love you. Bye.
It's weird because Coupang actually went green for like a quick moment and then back down to red.
iRobot appoints new CEO. If anyone still follows. Occidental earnings out. Rivian earnings out. Rivian. This is a little hard. What is this? Total revenues of $1.2 billion. Wall Street wanted 1.17, so it beat on Rivian for revenue. EPS. Again, I'm going to have to dig in to find this one, so give me a second. How's the stock moving? What's Rivian doing right now?
It is down 5%.
Thank you for coming. Coming to my my savior. What's it trading at? Let me look.
Trading under $10, down 5.5%.
Yeah, so it looks like EPS was negative $1.24, which was a miss on expectations of negative $1.17, and then revenue of $1.2 billion, beating expectations of $1.17 billion. Reddit's given some of it back. Not much, though. All right, give me a second. Is there ever a point you'd be interested in buying Rivian stock talk? Ever a price?
No.
Why not?
Okay, I'll say this without getting into too much of a rant. I just think there was a really silly dynamic that developed in the wake of Tesla where everyone kind of started looking at other EV players and thinking that they had similar potential to grow market capitalization in the way that Tesla did. And I just think that argument is silly. Again, people are gonna laugh when I say this, but Tesla is not just a car company. They have a variety of other verticals in their business that, whether or not you think those verticals will culminate in anything or not, they exist, right? Tesla has an energy business. Tesla has an in-house battery business. Tesla has a software business. Tesla has a robotics business. None of these other car companies have those businesses. And so, Rivian to me is literally just a car company. I would never, ever want to own a car company that had zero optionality. I think the only thing that makes Tesla interesting is the optionality, and there's no other peers that have that optionality. So that's the short answer. I just don't have an interest in owning a pure car business, of any kind. So, yeah, to me, until Rivian develops some other kind of vertical, or develops some kind of initiatives, in these other categories, then I just don't think it's even a comp, frankly.
Kevin, you got your hand up?
Yeah, well, I had a question for Stock Talk, but if we have other earnings, then by all means. I did have a Tesla question for him, though.
Go for it.
So Stock Talk, Elon posted, about a week ago, that they're going to be slow, and I'm going to put this in the right context, right? They're going to be slowing the expansion, the geographic expansion of their supercharging networks and focusing more on, let's say, like the urban centers, if you will, right? It seemed like he was kind of hinting towards maybe a slowdown, but what are your thoughts on that? Because that was actually like a key cornerstone thing for me personally about the future growth.
I don't know why
Tesla,
UpStart halted
the rapid
during the
growth
earnings.
and the expansion on
Weird.
getting out into the suburbs and potentially in the rural markets where it is a little bit of a headwind. What are your thoughts on that? Because I thought that was an interesting turn that I didn't expect to see at all when it comes to their strategy, especially when you're talking about the energy market and the fact that you had actually companies coming and soliciting and trying to get these charging networks or charging infrastructure at their gas stations and stuff like that. What's your thoughts on that?
Yeah, I'm kind of in the same camp as you. I thought it was surprising. I frankly, I don't think it's the right decision to make at this juncture, but the justification behind it, if you are going to justify the decision, is that EV adoption has slowed year over year pretty substantially. It's still growing, but the rate has slowed pretty dramatically year over year. So that's one causation for wanting to slow that effort. The second being, and again, this is going to be far-fetched and might incite some laughter, but if you imagine a autonomous network, superchargers as they're made currently don't make any sense. You'd need chargers that were also autonomous, right? Because again, and we're speculating here, we're thinking out into the future. But in a world where you had an autonomous robotaxi network, you wouldn't have a driver who would get out and, you're not going to expect the passengers to get out of the car and charge it, are you? So I think that's the problem that they're facing right now, which is trying to imagine how the supercharger network fits into a world that would have autonomous vehicles. And I just think the current supercharger program doesn't make sense as is.
From,
so
Brad.
They may be trying to, develop a new generation of superchargers that would work with an autonomous network. For people that remember, I don't know if anyone remembers the Snake, but I don't know, 10 years ago, Elon demonstrated this Snake charger that would identify the port on the vehicle and automatically insert the charging plug into that port autonomously. Now, that's not really even a crazy technology, especially at this juncture with the software they have. But something along those lines may be what they're working on. I don't think they're going to abandon supercharger expansion completely. Like you said, they're having more of an urban focus. But I also think they're probably going to develop a next-gen charger that, in the case that they do solve autonomy, would work with an autonomous network. So I think it's, twofold. A, because EV adoption has slowed substantially, it doesn't make sense to be as aggressive on the supercharger end as they were, in prior years. And B, being that it just doesn't make the supercharger product as is doesn't make sense for an autonomous network. So I think that's the thinking, but I agree with you. I was disappointed to hear that they were pulling back on that. I don't think this is the right time to be doing it. I think it's a bit early.
Yeah, I think that was for me, that was the nail in the coffin for the company to really shift to the, robo-taxi initiative, right? Like, we've heard a lot of talk about it, but that's kind of like the first step for me, where it says, okay, like this, they're actually going to try to do this. And obviously that's that model that he's thinking of right now in its early stages are going to be urban focused, right? Not focusing really on the suburbs and stuff like that.
Yeah, exactly.
So I appreciate your insights on that.
Yeah, no, I agree with you though. I was kind of shocked to hear that they were doing that, but when I try to justify it in my head, that's the main rationale I can think of, which is that they want to develop a next-gen charger for an autonomous network.
Stock Talk. Someone in my chat said Neo swap stations are the answer. Have you ever looked into that technology?
No.
Maybe not the way that they implement it, but is there any promise there in swapping the battery?
I used to think it was promising initially, but the CapEx required to put those in the places you would need them is just a crazy proposition. Not only do you need to put the battery replay stations in these places, but you need to have them stacked with batteries that are being recharged. It's just logistically a nightmare. I think NEO was onto something initially when, Chinese charging infrastructure was still on the come up, and NEO thought it would be a good solution to implement. But I think there's a reason it hasn't been replicated by other manufacturers. And I think part of that is cost, and the other part of that is logistics. I just don't think it makes sense. So maybe when the technology improves, maybe with induction charging, that might be a thing. A lot of people have started to speculate on wireless charging. Tesla has some patents in that space. I don't know if anyone remembers, a couple of years ago, they acquired a small company called LYFT, which is a wireless charging company. They bought it, stripped it, and sold it 3 months later. So there was something they took away from them that they thought was valuable to justify that acquisition. But that hasn't culminated into anything, and we haven't really heard too much from the rest of the industry on any initiatives for wireless charging. So that could be another thing to start thinking about is wireless charging going to become a reality in the next few years for these large batteries? One of the problems that we have currently is just A, the speed of charging, and B, the energy loss through induction that occurs. And so both of those are still a problem that hasn't really been solved in the industry. So yeah, long story short, I just think it's logistically and CapEx wise a nightmare to try to do battery swap stations all over the country. I think it'd be crazy.
Rivian bouncing back up a little bit off of that downwards candle there on earnings. But appreciate those thoughts. Kevin, any other follow-ups you want to get in there?
No, like I said, I think it's an unfortunate situation. I mean, unfortunately, and I'm being biased because I live out in the burb, like literally half burbs, half sticks. So unless you're at like a Target, you're not really charging a Tesla outside of your home. So it would be nice to see those expand. But I get it. We'll see. Long-term vision is the long-term vision, and we'll see if they're able to pull it off. And then we saw some of the China sales too, or the delivery numbers came in a little bit weak. I don't think that's actually that surprising, but it just seems like there's just like this negative data dump on Tesla over like the last month or so. Every single day, like it had some bright spots, and then it has some negative things happening. So we'll see
What's up, Max?
how this all pans out. But I don't have anything on top of that. Oh yeah, really
there should be less latency today. It should be quicker.
Rivian also has just an issue when it comes to their logistical network and their ability to scale out deliveries to make it cost effective, and their supply chain is god awful. So that's like another reason why they can't really scale the way that everybody expected them to do. A year ago, 2 years ago, what have you, which continues to be a headwind for them. So I'm not surprised by the earnings announcement that they had, and unfortunately I don't see how they're going to be able to turn this around and scale up without getting some more investment dollars, because they're just burning through a lot of cash.
Zoom info forward guidance. Shy, I'd like to loop you back into the conversation. I know a couple of names on your radar reported earnings. Anything interesting for you? What's catching Shy's eye?
Confluent looks like a really strong report. Jason's not on here anymore, but again, it's a strong report across the board. It just doesn't do it for me at 23% revenue growth for this year, and 1 to 2% free cash flow margins. Like, it doesn't make sense, this valuation they have right now. When it was at 32, it's fading. I was about to say it's going to fade most likely, just purely due to valuation aspect, where Datadog, for example, using the free cash flow margins, revenue growth, and EV gross profit, there's a 20% delta in Confluent's valuation this year and Datadog's valuation this year. So that's why I keep throwing out $20 price target for Confluent, because it makes sense to align the valuation towards like the Datadogs and Snowflakes to other consumption-based models. So
I will ask him.
I anticipate any kind of pickup in Confluent will be sold off. Again, Coupang is a similar story to a lot of the other winners we've experienced this earnings cycle, where they ran up in 2024 and it's continued up into the print, and the print was a strong print. It just wasn't strong enough to continue the party, I guess. It's all about consolidation period right now. And Coupang looks a strong print. Reddit, I don't know if it's just a short squeeze. I can't find anything except for the users of why it's like beating going up 20%. So who knows, maybe it's just a low float. I haven't really dug into Reddit that much. Rivian, again, this is not a 2024. If you're a bull on Rivian, this is you guys are fully aware this is not a 2024, 2020, even a 2025 story. Like, nothing about the earnings should kind of sway you in a different way. It's just so early on, and it's all about deliveries for them, and it's just nothing about the earnings should kind of scare people off. Like, I do think it's going to be pinned to this $10 price for a long time until they can start reducing their cash burn, and the metrics actually start to matter, because right now they're so far away for the metrics starting to matter that it's a nothing burger, in my opinion. TOST is interesting, where I'm looking at Shift4 specifically, F-O-U-R, any kind of sympathy plays for TOST, because Shift4 is the cheapest by a mile on any of the fintech comps, and they have a high floor, in my opinion, on their stock price, just due to the potential of them getting acquired, or most likely scenario they will be acquired. So I'm looking for them to, again, catch a bid off TOST. I'm surprised they didn't catch even bigger bid off Square last week, maybe because Square faded all that 10% move the next day, so Shift4 didn't really get any kind of sympathy play. But again, TOST and Square had a pretty decent print, and the price action after they reported is strong. So Shift4 is reporting, I think, Thursday, and this name does not belong at all in the 50s. Like, is disrespected. I don't have an edge in fintech, but I know enough of their partnerships and market share they have, and the current valuation is just straight dumb right now. By saying straight dumb, like it's being priced at 18 times free cash flow, and they're growing their top line at 40% still, with 9 and 10% free cash flow margins. Something doesn't add up, and it's really freaking weird. I know fintech, especially POS, within fintech is low margin, highly competitive, but come on, at a certain point, that's pretty wild, growing top line 40% with low teens free cash flow margins and only trading at 18 times free cash flow. Yes, a perfect example, PayPal is trading at 17 times free cash flow this year, and they're growing the top line at 9% with 2 to 3% free low single-digit free cash flow margins, I'm pretty sure. So, logical, I'll pass it to you since you're
Actually, really quickly, I'm looking into deeper on CNBC, and it says, for the second quarter, Reddit expects revenue 240 to 255 million. Wall Street wanted 224 million, according to London Stock Exchange data.
That's a 10% beat.
But one thing I will say, when companies first go public, analysts don't really have a great feel for the numbers they're going to be reporting. So the first couple quarters, you tend to see them further away than you would expect when they're 2-3 years of reporting and the analysts have a better grip on it. So expect the first couple earnings reports for the expectations to be a little bit more wonky, maybe a little bit of bigger moves as it settles into itself. But that is a common thing we tend to see.
The daily unique users, what was that? I had I'm in my car now. What was it, 37% year over year or 57% year over year?
And you get that back in front of me.
Because that was actually wild to me that many people were actually still like getting onto the platform.
37% up.
That's wild. I mean, that's probably the fastest rate of new active users out of any social media platform that's publicly traded right now, I would assume. I thought that blew my mind. I didn't even think that was going to be nowhere near close. I think that's probably more of a shock for the street than the guide for Rev, in my opinion.
By the way, just really quickly, I'm seeing people asking me about the UpStart being halted. They tend to do this around their earnings the last couple times, so I don't really expect any other news to come out about it. I think the news you got should be out already, and yeah. So, throwing that out there.
Astera Labs just recovered down 20%, so now they're great.
Interesting. There you go. Yeah, and by the way, I find it very fascinating. I will throw it over to Logical in a second. What Stock Talk said, that daily active uniques for Reddit is not just daily active users. It's people who've been there 10 times or whatever Stock Talk said. But I'm surprised they're even raising the bar artificially. But it's an impressive number. Not just users, but sticky users. Logical, what's up? Sorry, I've been waiting for a little.
Yeah. Oh, man, as I was about to say it, PubMatic just went up 12%.
Hey.
But it just looks like it just faded to 6 or something, but still very positive after being a little red right after that report. So pretty happy. Nice
little comeback. Stock Talk. I'm looking at Sawyer's page right now. He's talking about the Rivian. Rivian lost $124,000 per vehicle in Q4 2024. They lost $38,000 per vehicle this past quarter. Versus they lost $43,000 per car sold in Q4, and they lost only $38,798 per vehicle sold this past quarter. They now have $7.86 billion in cash, down 13% from $9 billion last quarter. So they burned what, $1.15 billion of cash in that past quarter. I don't know. It feels like we're coming at a head might be coming soon on this company. I know they actually raised some debt not so long ago. I don't remember when they did that one, but it was like $1.2 billion, giving themselves an extra quarter. But have you seen anything more on these Rivian numbers coming out?
No, I just think pretty underwhelming numbers across the board. I mean, you're going to expect this because, I mean, the economies of scale that Tesla has to survive a slowdown in EV growth aren't really shared by any of the other pure EV players outside of China. And that's an issue because, these legacy guys, they can lean on their hybrid and ICE businesses to float the top and bottom line while the slowdown is at hand. But Rivian cannot do that because they don't sell any other cars. They just sell EVs. And like I mentioned earlier, they don't have any other material verticals to their business. So it's a very, very different situation for them than it is for Tesla. I mean, I think it's going to be difficult for both companies, but it's a very different situation for them.
UpStart's unhalted apparently. What's that? What's it at now?
Down 17% or 13. Yeah, it's probably going to break 20 in my opinion.
Yeah, that's a big gap down. UpStart. What do they do again? Wait, no, let's not ask. I don't want to glitch the spaces. Haha.
They collect data on Excel sheets. That's it, and they do formulas and call it AI.
That's a $1 trillion company, in my opinion. Interesting. All right. What do we have coming up later in the week? Or is there anything we haven't talked about? We didn't touch on Occidental too much. OXY. Occidental EPS 63 cents, being expectations of 60 cents. Revenue was a decent sized miss, actually. 6 billion. Missed their expectations of 6.7 billion. Trying to see if I have any more data on forward guide. No. What did Occidental stock do? I wouldn't imagine it's a big mover. OXY. Looks like it's moving a little bit lower off the earnings. What's that percentage? This doesn't get after hours. What percentage is it down? Occidental and after hours? It looks like a couple percentage points. Whoa, weird noise. Rivian did release earnings. Sorry, reading that from the chat. Oh, they're not there. Anything else you guys are watching? We could talk about what we're expecting for tomorrow. There's a couple earnings coming. In the morning, we have Uber tomorrow morning. Uber and Shopify should be fun ones. Definitely focused in that direction. Should be good ones. Then after the close, we have ARM Holdings, Airbnb, Trade Desk, Robinhood, and a bunch of others. We also had some pretty big news stories today that we haven't really touched on. So maybe I'll just kind of actually, if anyone wants to get any words out about earnings that we haven't touched on, now is the time, is kind of what I'm saying here. Alrighty, no takers. Sorry for the weird voice. We had Stanley Druckenmiller this morning. He went on CNBC and had some interesting takes. He talked about how he was selling some NVIDIA, but he also had some negative words for Jerome Powell. Stock Talk, I don't know if you saw, but Stanley Druckenmiller was not a fan of Jerome Powell going on 60 Minutes. He told him he's not a rock star. Do you think Jerome Powell is a rock star?
I do think he's a rock star.
Nice. I agree. I think he should keep going on 60 Minutes.
I mean, kind of jokes aside, I generally don't like the celebritization of the Federal Reserve. So, to a degree, I'm
I'll ask about Shopify.
I think Powell should have, designated places where he can speak in between meetings because it's the chair. But when it comes to the rest of these talking heads on the Fed, especially the non-voting members, I think they're being celebritized a bit too much, and they certainly talk a little bit too much for my taste. And I think it's important to get cues of what the Federal Reserve is thinking or where they're going. What I don't think is as good is this idea of hanging our hats, or the market hanging its hat on their every word. And that's what tends to happen when you have Fed speakers, especially in between FOMC meetings. I just think it's a bit silly. I mean, at the end of the day, only voting members decide the course of monetary policy. And more importantly than that, there is a little bit of unification of opinion that comes from Powell's end. So, if anybody's going to be talking, I'd rather it be Powell than the rest of the members. But, I don't think his point is too far off the mark. I think that, turning members of the FOMC into celebrities is a bit silly.
That is fair. I hope you guys can hear me right now. Yes, you can. Cool.
We can hear you.
Shai, I actually want to go in a little bit of a different direction here and hear your thoughts about Shopify earnings tomorrow. Someone was asking me about it on what they're watching and what you're watching, and I would love to hear if that's a name on your radar that you're watching all that Shopify.
So I'm a massive bull on Global E. If you guys don't know about Global E, it's essentially the white label service that Shopify has.
Oh, you know what's funny, Shai?
Shopify, It's a polarizing statement I'm about to make. I don't know their long. I feel like they're the Stripe of SMBs for e-commerce, where they gave up their moat, which they absolutely had to in order to have that margin expansion story. But like essentially, I thought maybe the infrastructure side, that would be their moat to create this network effect. They gave that up for margin expansion, which I agree is an absolute must in the environment we were in. However, with the multiple that we're paying for right now at Shopify, where they're growing, 20% CAGR for the next 2 or 3 years, mid-teen margins, and in order to get this mid-teen margin, they had to give a network effect moat. They're trading at over 100 times free cash flow this year. It's a nosebleed valuation. It's being priced, in my opinion, for something that's a high barrier of entry that would never be disrupted. But I do think them giving away that infrastructure component of their network effect was a big miss for the long term. And I'm not saying Shopify is going to be going away. I'm just saying, like, in this stage of what Amazon was doing for their specific side of the business, like years ago, they didn't give that up. That was essentially their high barrier of entry for any competition, was the infrastructure side. Shopify gave that up. I just don't love the valuation here at all. I think it's a really, again, polarizing statement. I'm probably going to be the minority in this. I don't think this name belongs over $50 at all, using the valuations of the free cash flow, margins, revenue growth, and the EV gross profit. It doesn't belong over 50. And because of that, it's not on my radar until it retests that area. But some other names for tomorrow that we can talk about as well is Trade Desk is reporting tomorrow. That's a massive position for me. Again, part cyclical trade as well, but I'm a long-term investor. But ad tech
those are the Rivian numbers, by the way.
Firing on all cylinders. Like we're seeing it already with Meta, Google. We're seeing with Pomatic today. Just right now, actually, it's just up 10%. Like Trade Desk is the best option outside the wall gardens, and they've just outperformed significantly over the past couple years in an environment where they should have been punished severely during that recession that we had in business spending and that ad tech was just getting destroyed. Trade Desk was still delivering, and they have really good combination of mid 20% growth on top line, with 30% free cash flow margins in an election year where I've been very open about it. It's very polarizing, and it's in 6 months. Nobody knows who's going to win. All I know is that ads are going to be ridiculous. I also know for 99.9% confidence level, linear TV is absolutely dead. All these, the Comcast, etc., like they're going to be broadband. Linear TV is dead, and it's absolutely going to be streaming. CTV is the future. There might be some components of the live games or news or whatnot will just be on the streaming apps. So essentially, linear TV was, I think, the bearish argument of Trade Desk back in the day. That's clearly not going to happen anymore. So I think Trade Desk is a really great player. Compounding, they're going to have a lot of compounding growth in this specific theme. That's inevitable. Some other names I could comment on, unless take the mic if you don't want me to go on this tangent. But,
you're good.
Uber tomorrow. Oh, sorry.
No, you're good. Keep going.
Yeah. Lyft has some strong earnings today. Uber's reporting tomorrow morning at the open. They have their margin expansion story already. So I think the easy money was made in Uber. I'm wondering what their next step is going to be. Is Tesla's app competitor Natural Reality or just hype noise? Who knows? That's years away from finding that out. But I think Uber's partnership with Instacart today for restaurant deliveries is really interesting. I think Uber's going to be the perfect picks and shovel play for partnerships across so many different industries. And I do think that's kind of going to be their next growth avenue down the line. But I'm not too in tuned with what Uber's doing. But tomorrow, Robinhood, theoretically, they should have a really strong print. But they've ran up a ton this year. And they might have a similar price action that Coinbase had, where it ran up a ton, really strong print. It didn't go anywhere. That could be the case for Robinhood. Or maybe I know that it's retail crypto side of Coinbase was their weakness. Of like, oh, weird. The volume wasn't as much as I thought for on the retail side. The institutional side was really carrying the trading volume for Coinbase. could there be a world where retailers are just trading crypto on Robinhood and not as much as Coinbase back in the day? Who knows? We'll find out more about that tomorrow. Another name, AppLovin, is reporting they've had a really strong year. Obviously, the better investment between AppLovin and Unity was AppLovin by a mile. However, again, I do think AppLovin has a ceiling on their actual competitive advantage of moat. They're executing flawlessly past 18 months, and Unity is just, the tech is superior and just not executing at all operationally, but AppLovin is. So that's a name I'm watching as maybe a precursor for Unity, who's reporting Thursday after the bell. Duolingo is one name I completely fumbled the ball on. I know Brad, stock market nerd, is one of his favorite stocks, but I just fumbled the ball completely on that name. I just thought it was a nice gimmick. I didn't think it was down too much to it. I never thought they would be able to produce mid 20% growth with 25 to 26% free cash flow margins for multiple years. I'm clearly wrong, and this name has ran up a ton, and it's still only trading 70 times. It's actually pretty pricey now. Wow, 70 times free cash flow for this year. So that's a name that, I don't know, it could fall under the same bucket as winners who've been winning in 2024. Strong print, but not good enough, and they've been fading. So that's a name on my watch list as well. ARM, I mean, everyone remembers ARM, what happened last quarter, where he just went up 40 to 50%. It's a low float name. Perfect picks and shovel play for this new AI theme, because essentially they provide a design for all the chips. You have to go through ARM. It's just, I hate that SoftBank pretty much owns ARM, essentially. And it's inevitable that eventually SoftBank will be offloading ARM. Who knows when that's going to be, but that is going to be an overhang headwind for them. Also, they're really freaking expensive. They are trading at 258 times free cash flow this year, growing the top line low 20% with insane margins, primarily because they don't really own any IP or product. They design the design print. So their gross margin, I want to say, is in the mid 90%, which is unheard of. But again, like I said, they just design the blueprint designs for the semiconductor chips. Perfect picks and shovel play. I like ARM half the valuation it's at right now, and it's ran up 44% this year. So this is a name that's definitely going to be a high beta name. Of could it go to 150? Yeah, it definitely can. It can also hit 60 to 70. It's going to be a massive mover, and it's kind of wild to say that because it's $100 billion plus company, and you really see a company at that size move that drastically. But that's what SoftBank is essentially doing this name, where they own all the float. It's a low float name. I do think that I mentioned the SoftBank headwind. That could also be a tailwind where SoftBank knows that the more they set, they like the small float, low float, because the name moves a ton. And if they offload some of their shares, that kind of advantage of ARM, moving a lot on the upside easily, will get diminished as they offload their shares. So I'll pass it back to you because I just talked a shit ton. But hopefully I gave some people some insight in the next 2 days of earnings.
Definitely did. Some good stuff coming up. I appreciate that commentary, and I'm glad we're going to get to be on live on Spaces for a lot of them. I feel like Uber and Shopify would be after hours earnings, so I'm a little surprised to see them going in the mornings. Just like I was surprised to see Disney go in this morning.
One more comment I want to make as well. Sorry to interrupt. DigitalOcean, I'm telling you, they're reporting Friday morning, which is I have zero. That's why I thought of the name, because you just told me about wonky times of reporting. DigitalOcean Friday morning. What if you're not a bank or an oil company? Why are you reporting Friday morning? That's the weirdest thing in the world. But again, I being the dead horse, being the horse, infrastructure names have been showing reacceleration all earnings season. DigitalOcean is the only pure cloud computing name in the marketplace. Primary bread and butter is SMBs, sure, but they do have an infrastructure. They are an infrastructure player. So again, the three big names reported reacceleration. I anticipate the same thing for DigitalOcean, and They just got included in the S&P Small Cap 600 last week. So you're seeing a lot of volume trading just to reshuffling on the ETF side. But this is a name that's like undercovered. I think it's going through a management transition 2 quarters ago. But they have 20% free cash flow margins. I don't love the top line growth of growing in the low teens. However, they're only trading at 40 times free cash flow as an infrastructure player for cloud computing, which you're seeing is showing re-acceleration and going to be one of the vital components of this AI theme that's in the early innings. And also, they have a GPU component via the acquisition of Paperspace last year that was an absolute game-changing acquisition that turned out that they made that Paperspace acquisition. So if people can't afford the GPUs, they can go through DigitalOcean is going to use their millions of developers that are using their specific product. They can help with the GPUs via Paperspace. So I think they have a lot of tailwinds for them. I own 300 shares. I have 100 shares I'm ready to add Friday. I just want to wait for their earnings Friday morning. I want to build this position because it's worth less than $5 billion. It's a vital infrastructure player for the SMBs in a very early component of this AI theme, and I think has a long runway to go. So I'll pass back to you, Evan. Sorry to interrupt.
No worries. I appreciate the conversation. Definitely feel free to jump in on more stuff. I was just going to roll through some of the other big news stories that I saw today and just hear some thoughts about it. One thing that I did think was a little interesting was this headline from Bloomberg. It was Sam Altman-backed nuclear developer nabs approval for SPAC merger. So I guess we're back to talking about SPACs a little bit. But the reason I thought this one was a little bit interesting, company's called OXY. Sam Altman is the chairman of the company, and the SPAC it's merging with, Sam Altman is backing the SPAC. So he's combining a company that he is the chairman of with a SPAC that's out there. Kevin, I guess it's just SPAC territory, so anything go. Oh, Kevin's not up here. Stock Talk, I guess we'll throw it to you on this one. It's SPAC territory, so I guess anything goes, but that feels a little conflict of interest weird. Maybe.
Wait, what? That he's on the SPAC, but it's also a company that he's on the board of?
He is the chairman of the board of the company, and he is merging with the SPAC that it says he's backing. I don't know if he owns the SPAC directly, but he's backing the SPAC.
I'd have to know the details of what his relationship is at the SPAC, but I mean, no, not really. I mean, a SPAC is just a vehicle to take a company public. So some amount of proceeds from that special purpose acquisition vehicle are going to go to the business. I don't know what that proceed contribution is. I'd have to look that up, but X amount of money. I think the last thing I saw from that deal was like $350 million, I think, from the SPAC is going to the company. So yeah, I get the point what you're trying to say, but it doesn't really work like that in the SPAC world. Just think of a SPAC as like an IPO vehicle. That's really all it is.
Could be worse. It could be Tiamat's SPAC.
Oh, speaking of, we did have Clover earnings. Let's see if that's doing anything. Is Clover moving a lot? Can you guys look quickly while I'm getting see if I see the numbers? I'm not seeing any numbers for Clover. Oh well. We did also have that Apple event today, which went about exactly as expected. Apple announced new iPads. They announced new iPad Pros. They announced new iPad Airs. Does the market care about iPads? Not really. This was the thinnest product Apple has ever made, ever. A lot of people were commenting about how easily they think it's going to break. I would imagine it's not going to break that easily, but we'll see. But the thing that was surprising was the M4 chip. Apple announced its next silicon chip. The iPad Pro, it's a little odd that that's the first hardware piece that's getting it. You would think it would be the iPhones or MacBooks or something like that, but nope. It is the iPad Pro that's the first one getting an M4 chip. I'm saying that a little weird, so I'm going to stop. But they did focus specifically on AI in this event, talking about their neural processing unit and that it's better than a lot of other computers out there, or it's the best hardware chip for AI or something like that was exactly the language they used. Monative, this sounds a little up your arena. Did you watch the Apple event today? Were you surprised to see the M4 chip being released today?
Well, not surprised that it was released today. Surprised that they didn't have more announcements. I think there was some leak a few days ago saying that was going to be on the custom Mac Pro that they use to power their own data centers. But again, that's no news if all it's doing is its own data centers and it's not available for outside or something like that. This one, iPad used to generate a lot of excitement. iPad Pro is probably a very profitable product for them. So, they could probably squeeze a little more margin out of this by saying it's a new chip, and it's been, lacking a refresh for a while. So it was just convenient timing. I suppose they put it all together. Plus, I think iPad has moved to a new factory in Vietnam, so they probably had it all retooled just in time for all of this to happen. So it made sense. But again, none of these should be market-moving events for a company the size of Apple. So today was a completely meaningless event, other than the fact that they introduced the M4. It really didn't show anything that a company the size of Apple should be announcing on large events. I still think that they are in advanced stage of negotiation with either Google or OpenAI, whoever is more desperate to sign the bigger deal. And that could be market moving. That could bring them, 4, 5, 6 billion. I don't know what it is, but a significant size, annual revenue, just to expose their large network to one of these two players who need to monetize their, AI investment. So I think that's inflecting enough to say something about. But other than that, this was just financial engineering this quarter. There's really nothing there.
Wolf. I was having trouble muting. Wolf, what's up?
I saw your tweet, by the way, on UpStart there, but down 17%. And what did the company do? Pretty crazy. UpStart at one point, when you look back, this company from IPO was up 1,850%. And at the low of where it just went today, it's bounced back a little, but you would have been down on that. It would have full retrace of almost 2,000%.
UpStart's a funny one.
I'm an UpStart victim. I think I lost the most amount of money in the past couple of years from UpStart.
Hello, my name is Shai, and I lost money in UpStart.
Wait, but it's called Up, so how would it go down? So, yeah, Shai, you would appreciate this, because obviously you've seen the Mark Minervini interview, right?
Of course. I was laughing so hard when it happened.
Okay, so Mark Minervini had that interview, obviously. So about, I want to say just 2-3 months after that occurred, I actually interviewed Mark Minervini at a conference. And the way that they did it is he couldn't make it to the conference, so they had him Zoom in, conference in, and I sat on stage with Richard Moglen, for those that know him, and we asked Mark questions, and in the middle of us chatting with him, we actually had technical difficulties, right after we asked him about a stock, and people in the audience were loudly making all of the jokes of the lines of what does the company do? Oh, technical difficulties. I can't hear you, Mark. So it was a pretty interesting time to be alive.
Do you think it was technical difficulties on the original video?
No, I think it was technical difficulties of
on the second one
with the stock.
Yeah,
technical difficulties on mine, yes. On me interviewing him, yes. I don't know about the other.
That was so bad. I cannot believe you on public TV just not knowing the main thesis.
No, that's fine. That's fine. If you're a trader, that's no problem. He was presenting a little bit more of the fundamental narrative, but if you're a swing trader or a day trader, Stock Talk doesn't need to know what's happening with all these companies. He just needs to know enough to not get blindsided and stuff. So his mistake was not saying, I'm in this for a swing trade, I don't know.
Yeah, like on my spaces on Monday nights, for those that are in there, Michael Naus, who has won our competition for the week where you're dropping a stock pick for the week, he gets up there every week and he goes, all right, just as a disclaimer, I used an algo to pick these. This company's at the top of my relative strength. I have no idea what they do. this is a company that I'm picking for the next week. He's like, I do not care what they do. I'm picking this off of the chart.
Yeah, that would have been the right answer for Mark Minervini to give, that it was a technical trade and that he had no idea what they did. But instead, he was like, oh, you're breaking up, which was just silly.
Stock Talk, what would you have said?
I would have said it's a technical trade and I have no idea what they do. That's what I would have said.
The funny part, though, was he was like, repeated the question back. He's like, what do they do? And then he like paused and he goes, oh, wait, you're breaking up.
The whole point of UpStart was their quick scoring models. They had this magic mushroom risk model. I mean, fuck that. Seriously, I have managed risk for a risk model, right? The risk data side of a mega-sized bank. It is not trivial to change the model, to make things go faster, to use alternate data. All this is bullshit. The only way you can do that is by increasing risk, which is what happened with UpStart. They did all this scoring, they qualified users, and they ended up having to, part the debt at discounts. That's the only way you can change risk models, which is accepting greater risk. There is no shishi-poo-poo fancy, magic here. It doesn't work. This has been, for people that know me, I've been, absolutely nasty to, companies in this space, plus the BNPL, which is also, risk scoring in a way. Both of those businesses don't belong in society. It's just a shell game. They are just moving risk around. That's it. There is no business here.
I was just about to say it's a game of hot potato for risk. That's essentially what they're doing, and that's why the buy now pay later is essentially the same thing, same shit, different day. But with UpStart, why I got deceived is when they IPO'd, I didn't realize how cyclical of a business they were in, and obviously when they IPO'd, it was just the perfect side of the cyclical side of their lending business, where I was like, oh my god, I don't know if this is as cyclical as what like the FICO's company is, but it's reporting insane fundamentals, and as soon as it turned, holy shit, it tanked so fast. And then once that happened, I was like, I should dig deeper into this company, and I found out essentially all they used is an Excel model to justify the risk, and it wasn't really AI based at all. It's just like I was an analyst at the time, senior analyst at the time, and essentially what they were claiming was AI. I was like, I do this data dump in my Excel modeling and create models based on risk parameters ready for my corporate strategy job. Like, I'm not going to start a public company and claim that I'm revolutionizing FICO scores and I'm using AI for it. So I definitely, that was like my first gut punch of like, oof, I need to do more due diligence when I make an investment. And again, everyone has that story. My story is UpStart. That was my first gut punch of, you literally stole my money, in my opinion, from deceiving everyone else. And now I'm just like so on top of my due diligence. I'm never going to let that happen. And I think everyone needs to experience that first like bump along the road.
Yeah, when these businesses first started coming along, and there were lots of these companies in China that would do, very different risk models. You have to remember the way a bank works. Risk model pretty much tells you, if you take your daily balance sheet and you run your risk model against it, it tells you what you have to lend the next day. It basically tells you, for $100 in deposit, how much can you loan out? If your models are downplaying the risk, that means you're lending higher than you'd normally have if you scored it correctly, which basically means your capital reserve ratios are probably going to be off by a minuscule fraction on a daily basis, but adds up very quickly. We had management yell and scream at us every day for 6 months, saying, hey, all these competitors in the Hong Kong market are taking away market share because they are giving loans to people we just turned down, and we're losing business, we're losing market share. Go fix your model. And we looked at that model forwards and backwards, and we did all the due diligence we could on these companies, and we're like, doesn't make sense. There is no way this risk works for us. And we told the chief risk officer, hey, you want to take on additional risk? Like, no, their models are better. No, they're not better. They're just taking on more risk. That's all it is. Where Upstart could have done a much better job is they do have a much better app that funnels customers, and a lot of small banks do not have the technical ability to implement these things, and they blow money on building their own technology, which is a stupid thing banks do, because they're really terrible at it. They should just be buying. So Upstart should do more collaboration with banks where they funnel their leads into the bank, let the bank score them again and accept those deals and just take a smaller commission for it instead of taking a lot of the amount that they took on their own, that they had to, to put it into a securitized bundle, is where things started unraveling with Upstart. It's not... Banks are not stupid. They do risk scoring a certain way, almost uniformly across, with minor differences across the world. It's pretty uniform for a good bank. It didn't happen by happenstance. You can't just come out and say overnight, yeah, I have an AI model and I can do much better and I can give loans to people that you just rejected. It just doesn't work that way.
Yeah, Emperor Door said we know more about DJT than we do about Upstart, or someone else said something about that. Let me bump. What's up, Hamid? How you doing, though? We know more about what DJT does than Upstart, is what Emperor Door said. I botched that quote. Hey, Hamid, though.
Hey, guys. How are you?
Doing well. Can't complain. Can't complain. Got a busy day of earnings here.
Who's reported so far? What have you guys talked about?
There was a lot going on. Yeah. We had companies like Rivian, and we had companies like Occidental, Coupang, TOST, EA, Confluent was talked about a little bit, LYFT as well, Upstart with a big dumper there. So been a lot of names reporting, a lot of small mid-cap names.
How did LYFT do?
The stock itself is up about 5% in after hours, but still down on the day, given that it was down 5% coming into this. Give me 1 second. Then looks like LYFT's numbers. Looks like EPS was 3 cents or 15 cents. Wall Street wanted 3 cents, and it looks like revenue was 1.3 billion. Wall Street wanted 1.2 billion for LYFT.
Wow, those are pretty good beats, actually. Not bad.
Yeah, the EPS beat came in as a big one. All right. I hear you driving a little bit, Hamid. What car are we in right now? We in a Rivian? We in a Tesla?
Tesla.
Nice.
And it's driving itself, but it makes me look in the front. I can't look down at my phone. So
how has
I can't check these prices on my own.
Hamid, you got to get the sunglasses that have like an eyeball on the front of them, and the eyeball's always looking forward.
That's what I need. That's totally what I need.
Hamid, how is the new FSD update doing? I've heard some good stuff.
Oh my God, it's like night and day difference between 11.x versus 12.3 plus. 12.3 went just like, first of all, for the previous year, there was basically no improvement. Every fucking update was like something would be like off and it would be a disaster. It'd be like, what the hell is it thinking? Like, it's changing lanes for no reason. It's changing lanes to the right when it's about to make a left. I mean, they would just make so many mistakes. It's hesitant. It just brakes for no reason. 12.3, all of a sudden, it went from like being jittery and like all kinds of problems to being like nearly perfect. I now go parking to parking with very little, if any, intervention. And usually my only intervention is just pressing the gas pedal, because sometimes it's a little bit overcautious on stop signs in particular. It comes to a complete stop right before the intersection, and then it inches forward. It takes it a few seconds, but if you just press the gas, it just goes and does the right thing, and it's so good. It's so good.
Awesome. I love to hear that. Is it changing your tone on the stock at all? I know you've we have our thoughts on Elon Musk, but I don't know if FSD actually comes to fruition. That's a pretty big deal.
It's a huge deal. So I've been bullish on Tesla for a long time. I'm not bullish in the short term, just to be clear. I think that in the short term, there will still be more buying opportunities. That's my viewpoint. If I still own a pretty significant amount of Tesla, but I thought that the price had gotten ahead of where its current sort of results were. As much as 2.5 years ago, I started saying that. So, and I got hammered by the Tesla community. I'm like, I put out a video how Tesla is going to be one of the most valuable companies in the world back in 2019. So when everybody still thought Tesla was a scam and that it was going to go bankrupt, and I still believe it's going to be the most valuable company in the world, but it just ran way too fast in a very short period of time, and I thought that the performance needed to actually catch up with where the stock was, and I think right now it's sort of like fairly valued. It's not like way undervalued. It's not way overvalued, but FSD is going to be finally coming to fruition. So I'm pretty bullish on this sort of like robo-taxi thing, but I do think it's going to take them at least another year or two to get it out there and like actually functional in the same way that Waymo is. But the moment Tesla starts making it functional, I think it's going to do it at a larger scale and faster deployment than anybody has ever done before. So, that's sort of like my viewpoints on it.
Stock Talk, any comments you want to get in? You a FSD user? You have any thoughts on how it's been?
I think the new version, like Hamid said, is much more impressive because it's end-to-end neural net. But getting to regulatory approval is an entirely separate conversation. And that's really going to be the struggle for Tesla going forward. It's this idea of impressing the user is one thing, and I think users, even before the 12 series, FSD 12 series, were impressed by it. I mean, the first time I ever sat in an FSD car was, what is it now, like 4 or 5.5 years ago, 6 years ago? I don't remember exactly when it was, but it was, I think, the third official broad release. And I remember my buddy tried to take me back from the airport in it when I was visiting one of my buddies. And it was impressive, but, there was a ton of need for intervention at that time. And now there's almost none. And I think that's the difference. So the product has gotten better, but that's an entirely separate conversation. Product quality is an entirely separate conversation from regulatory approval. Talk. Regulatory approval, I don't think is going to be that difficult because Waymo has already been paving the way, right? So, for example, in cities like Phoenix and San Francisco and Los Angeles, Waymo is already operating. And, what are these cities going to say? No to Tesla? I don't think they can. So I think the difference is subtle, but I think the difference is this, which is that if you've already looked at some of the whispers from the Hill on this topic, and there have been some sources on the Hill that have talked about this, is this idea of restricted usage. In other words, like Waymo, you can't, for example, I was just talking about the airport, you cannot get a Waymo to the airport in San Francisco, okay? Because it's outside of the regulated zone. It's outside of the pre-mapped zone. So that's an issue. I, in my view, even though regulators have approved Waymo and Cruise in many cities, I think approving FSD for generalized use is still a step up from that. It's not, Tesla's not asking to have, a certain geographical region in the city allocated to Tesla. They want people to be able to use FSD anywhere. And I think that's the distinction. I see what you're saying, but there's a couple of things here, because there's robo-taxis that could be done in limited use in the same way that Waymo has restrictions, right? So they could potentially roll that out as early as next year, a year from now, for example. And I think they'll get all their sort of ducks in a row for limited release and limited availability within sort of a handful of cities. And then they'll start expanding very, very quickly. And then there's sort of FSD for people to use while they're driving. And the question of whether or not they need to put their hands on the wheel so that, all the time, or can they watch Netflix while they have FSD on? I think that will also be very close to, like getting approval. What would be the argument against it? At some point, if the cars are driving by themselves and giving robotaxi rides, I think it would be hard to argue against sort of like being able to watch Netflix while you're driving and for your personal use. If they do it on a step-based process like that, like you're outlining, then I think they can. If the question is, can Tesla get regulatory approval to run a Waymo-style network in these cities, I think the simple answer is because Waymo's already done that work. But if the question is, can Tesla get the generalized approval to use FSD throughout the country, I think that's a little bit more difficult. So I don't know, what the time frame would look like in between those two milestones. But I agree with you. I think if they want a Waymo-style network, they can get that done pretty quickly. If they want more than that, I think that's a little bit more of a challenge. And the issue with the Waymo-style network is like, if they do a limited launch in, let's say, 10 large American cities, they have a pre-map zone they can operate in, like, what's the real earnings potential there? Like, I think it's more proof of concept at that juncture. I don't think it's going to make a material difference to the business to have limited releases in 10 cities. But if it's a flawless operation, then maybe they can coax regulators into allowing federal approval. But the big challenge with this type of technology is proof of safety, which is it sounds like it's pretty rudimentary and easy to demonstrate, but the issue is that you can't prove that you saved a life. That's the hard part of this. Is like, if Tesla were to make the argument that like, hey, we're saving X amount of lives by having this technology on the road, how do you make that argument? That's the challenging part of this equation, in my view. Because again, people don't know if they don't die, but I think statistically you can prove it by saying the number of miles driven, right? Like, is that statistical proof though? I think that's how like they measure the safety ratings of various different vehicles even today. It's based on like 100 million miles of like drive. How many deaths are there, right? Like, and from year to year, like in fact, Warren Buffett was talking about it in his talk when he was asked about insurance and full self-driving and all this stuff. And what they were talking about with insurance is that like the number of deaths per I think it was 10 million or 100 million miles driven, it was like 7 as much as 30 years ago, and that has come down to all the way down to 2 just because of the safety improvements of vehicles and so on. But from an insurance perspective, the cost per death and the cost per accident has risen, so insurance rates haven't really come down. But let's say, for example, you could have enough miles under FSD without intervention, where after, like a year of limited city trials, you could show that, okay, look, 100 million miles of drive has resulted in like 0 deaths versus typical 100 million miles would be like 2 deaths or whatever. Then I think, at some point you're going to become statistically significant to where it would be hard to argue against. So I think it might take time to get there, but it won't be like more than 3 years, probably. Yeah. I think that's a bit optimistic, but again, this is anyone's speculation, right? There's no way for us to know for certain. You could make that argument that that's the required data set, which is like miles driven versus either accidents or deaths. I think that would make sense. Then it also complicates the idea that these, FSD still has the ability for driver intervention. And so then we have to go back to this whole concept of, was FSD on? And if FSD was on, was it at fault for the accident? We've already kind of gone through the loops on that on a few different cases already. So there are some... I agree. The current stats can't be used, I don't think. I think they would have to have robotaxi stats where there is no ability to drive. Like, Waymo has actual stats on their vehicles, right? Like, exactly. And even the thing with Waymo is even if Waymo is able to demonstrate that, like if Waymo were to say, okay, we have, X 100 million miles driven or whatever the benchmark is with, less deaths than normal vehicles, the problem is they still can't do the step up to being a generalized software because they're not a generalized software. So I think that's Tesla's biggest competitive advantage here is if the industry and if regulators become palatable to a generalized autonomous software, Tesla is the only one that can really fill that void. So from that advantage, I think they have a competitive advantage. From that standpoint, I think they have a competitive advantage. But I think it'll take a while to roll out. We'll see. We'll see how this initial test goes. I think the plan is to launch a limited use case autonomous program with human drivers initially, and to kind of use that as a proof of concept and then go from there. I think that's their game plan. At least that's what it looks like it is. So we'll have to see how that pans out. But no, I agree with a lot of your points.
All right.
Good stuff. I do have to go. I'm going to say bye. I'm not going to drop out because I was offended or anything, but I'm going to be dropping out in a couple minutes. Just a bye.
How dare you, Stock Talk? Don't talk to Hamid like that. We understand if you leave Hamid, though. All right. I think this was a good conversation. We have a couple earnings we're watching tomorrow. Also, if you guys don't know, we're going to be having Dan Niles come on here, and we're going to be talking some tech, some other stuff we got coming on. So we're going to get a little bit of live earnings and then a Dan Niles interview 4:15 to 5:15 p.m. Eastern. So definitely be on the radar for that one.
If you have questions from Dan Niles that you'd want us to ask, you can comment those in the Spaces chat or DM them to Evan, but I think he'd prefer you to comment them on the Spaces chat. So if you have questions for him, drop them on the Spaces chat, and then we'll try to get to some of those tomorrow.
Yep, for sure do that. Leave us some questions, comments, anything you want us to talk about with Dan Niles tomorrow. Should be a good conversation. I'm looking forward to it. He was a tech investor who was green in the market in 2022, and if you remember what that market looked like, that's a tough feat. So I like hearing from different spectrums and sides of the tech market, and this is someone who loves to talk about all that stuff, but kind of sits on the more safer side of it. So I always enjoy hearing what he has to say. You should make sure you're following the speakers up here, though. They're all fantastic. Will improve your experience on this app, on this website, whatever you guys use, whatever we want to call it. And I just appreciate them for always adding so much to these conversations. If you enjoy these type of live, free conversations as well, you should make sure you're following the host of the Spaces. We're live every single Monday through Thursday, 3 to 5 p.m. Eastern at least. So stick by us, and you'll get a lot of really great content coming forward. Stock Talk, any comments you want to get in there in the end? Anything you want to say?
No, we'll see you guys tomorrow. We have lots of fun earnings tomorrow. We probably have a bigger earnings day tomorrow than we had today, honestly. We have Uber, Shopify, Affirm, Toyota, Permian Networks all in the morning. Then after hours, you have ARM, Robinhood, Airbnb, AMC, Trade Desk, Beyond Meat for some of you vegans and vegetarians out there, AppLovin, Duolingo. So a lot of big stocks tomorrow. A lot of retail favorite names as well. It should be a fun day of earnings tomorrow.
Yeah, I agree. We have a lot of talk about Apple on these Spaces, and it tends to be me against the world. That's what it feels like, at least. So I pinned up in the nest above. I put out a tweet. Tell me why I'm stupid down in the comment section, which are monetized, obviously, about why I shouldn't be an Apple bull for the long term. Would love to hear any good takes you guys have. There was one really funny one in there, the person who posted the meme with the Trojan horse. That one did make me laugh, but yeah. Make sure you're following the host of the space. Wolf, any comments you want to get in there as we're closing out?
I think you covered it pretty well. Big day tomorrow with Dan Niles coming on. Excited and looking forward to that. More earnings to come. Robinhood and others, which we've covered pretty extensively throughout the day. No more Spaces for me this evening, and I'm actually going to be off in the morning as well, so I encourage people to go and trade with Jordan. And then at 2 p.m. Eastern tomorrow, we are going to have our stock market prediction space right before we roll into our 3 p.m. Eastern stock market talk Spaces. So pretty fun day. Enjoyed spending it with everyone. That's going to do it for me, unless there's anything else for you.
Nope, good. See ya. Bye.
All right. Bye, everybody.
All right. That Space is now done. I'm going to end this live stream in a second as well. I appreciate you guys for hanging out with me. If you guys are in here and not subscribed already, you should make sure you are subscribed to the page. We are at 3897. 3 subscribers away from hitting that 3,900 mark. I'm trying to do a lot more of these. Paul, you're saying, just got a text from Robinhood saying they're offering 5.25% on cash. I actually got that ad a little bit ago. Paul, are they asking you to deposit like 17,000 or 20,000 or something like that dollars to get that yield? I think that's a strategy they have going on. But yeah, you guys, if you're on here and you're still on the live stream, it means I feel like you enjoy what you're watching here. So make sure you hit that bell button so you'll get notified whenever I do these type of things. This is the heat map we had for the day today, by the way. Little final remarks of how the market was doing today. Tesla down, Disney down big, Google, Merck, Costco, pretty much a lot of green across the board. Just these mega cap names really bringing us down, standing out a little bit. Let's see, we're 3 subscribers away still. We did get to the goal for watch hours on this video. My goal was 20, and we're at 20.2 watch hours. Nice. That slow build up to the 4K. If I had every single thing I did was 20 watch hours, it would take me 200 days of live streaming to get to that 4,000 watch hour mark. Yeah, Tesla sad, Paul. I agree. It would have been nice if it was green today. Disney is one that I'm a little bit more sad about, I can't lie. But yeah, I see someone else just liked the live stream. Goat. Alright though, I'll catch you guys all tomorrow, I think. Let me look through everything we got coming. Quickly see if there's anything on the Catalyst watch. Tomorrow, Costco expected to release its monthly sales report. Let me make sure I write that down to be on watch for our stream tomorrow. Philip Morris, that will happen before, okay. And then earnings front, will be very busy with an Airbnb, an ARM, a Trade Desk, a Hood. Those are probably the ones that I'm watching the most. And then on the macro front, tomorrow is Wednesday. Wholesale inventories at 10 a.m. Eastern as a choke. And then 3 Fed presidents speaking at least. I would expect there to be more Fed presidents than that. So that's what to keep an eye out on for tomorrow. I'm going to be live probably doing something similar, like a 3:15 to a 5 o'clock, 5:15, 5:20 Eastern. So stick by me. We're going to be having Dan Niles on here tomorrow, which will be a really great chat. I always love listening to what Dan has to say. He's really smart. And I think we talk a lot about the super bullish side of it and sometimes don't talk about the risk side as much and enough. So I enjoy talking with Dan and hearing that side of it. So it should be a good chat. I'm gonna get that recorded live on here, then I'll probably clip it up into a nice video as well. But I'm gonna actually stop rambling here and end this live stream. I appreciate you all for joining in, and I'll catch you all tomorrow. Have a great one.